Today I want to talk about one of the crucial concepts you want to understand as you start to manage your own investments. Taking over investment management for yourself can seem overwhelming and complex if you've never done it before. But there are a couple of key concepts that you want to understand, and that'll take you a long way towards being a more confident investor. So today I want to discuss investment fees and how they can impact your investment strategy. Comprehending fees is a vital component of understanding your overall investments, as they can be hidden and not completely clear, and they can also be layered on top of each other, and you can end up paying thousands of dollars that you don't need to pay if you don't know where to look for them and how to effectively manage them. Whether you're working with an advisor or investing on your own, there are fees involved in various aspects of your investing, and by understanding them, you can control them and make sure that you aren't overpaying. There are three primary kinds of fees that are associated with your investment accounts, and they actually can be layered together. So the first is the expense ratio, the second is transaction costs, and the third is advisor fees. So just to break those down a little bit, with the expense ratio, that is a cost charged by any mutual fund or ETF that you're investing in, and it's for the service of putting together that investment basket for you. You can generally find that on the fund or ETF webpage, and it can range from fractions of a percent to well over 2%. So you want to make sure that you understand what it is before you buy a specific fund. The second kind of fee that you'll be faced with is transaction costs. And transaction costs are the fees that are charged by the investment firm where you hold your investments to buy and sell various investments. Again, those are something that should be available to you and very transparent on the investment firm's website. And then the third kind of fees are the advisor fees, and there's a variety of different ways that these can impact your portfolio. Some advisors are paid based on the sale of products to you, and you won't ever necessarily see that fee. Other advisors are paid directly by you as part of an expense for managing the portfolio. In any case, your advisor should be able to clearly explain to you what their fees are and how they're paid. You can see with these different layers of fees, if they're all there, they can add up significantly. And so if you had a portfolio that returned 10% in a given year, but you had 2% worth of fees built into the overall portfolio, your returns are now 8%. It doesn't seem like a very big difference, but over time that can add up to hundreds of thousands of dollars less in your pocket. In order to manage your fees, there are a couple of steps that you want to take. First is just understanding where the fees are and making sure that you can see what different fees are being charged at different places. The second is to understand transaction fees and make sure you're using a lower cost provider. A lot of the big firms have significantly reduced or eliminated transaction costs, and especially if you buy funds issued by that company. So by buying the funds of the company where you hold your investments, you can help keep those transaction costs lower. You also want to make sure you're paying attention to the expense ratio, and you don't buy any fund without first understanding what the expense ratio is inside that fund. And then finally, make sure that your advisor is explaining any advisory fees to you, and you can understand whether those include the other transaction costs or if those are in addition to transaction costs. So the first step is understanding all of the fees that can exist in your investment portfolio. And then once you understand where those fees are, you can take steps to help minimize them in different areas. And by doing that, you'll go a long way towards making sure that you aren't overpaying fees. And if you combine your new understanding of fees, along with what we've discussed about asset allocation and diversification, you now have a good understanding of the very basics that you need to get started with managing your own investments. And if you ever feel like you need more help or guidance in the process, please reach out to a qualified financial advisor.